Hello and welcome. So today we're going to tackle a topic that can sound, super complicated, crypto mining. But here's the plan. We're going to throw out all that technical jargon and look at it in a way that just makes sense. We're going to treat it like a small business. Ready? Let's jump right in. So let's start with a kind of weird question. What if there was a business whose only job was to verify the truth? I mean, think about it. No product to sell, no typical service. You just get paid to make sure financial transactions are legit. That, right there, is pretty much the core of this whole crypto mining business. Okay, so here's our game plan for this explainer. Think of it as our business plan. We'll kick things off with what this new kind of business is all about. Then we'll get into the actual job. Think of it as digital bookkeeping. After that, we'll talk tools and costs, how the business gets paid, and finally, we'll look at the mining bottom line. Let's do it. First up, a new kind of business. We need to establish what this venture is actually doing. It's not about making a physical product. It's all about providing an absolutely essential digital service. Here's a good way to think about it. Every single time someone uses a cryptocurrency like Bitcoin, that transaction gets written down in a giant public checkbook. Well, our business's job is to be the auditor, the trusted accountant who checks every single line item to make sure it's real and nobody's trying to cheat the system. And the folks or the companies doing this work, they're called miners. Honestly, the best way to picture them is as a bunch of freelance digital bookkeepers. Their whole job is to keep that public ledger of all the transactions totally accurate and up to date for everyone involved. So, what does a day in the life of one of these digital bookkeepers actually look like? Let's break down the work they're getting paid to do. So, what's the actual day-to-day work like? Well, it's basically a race. It all kicks off when a new transaction pops up. Suddenly, all these mining businesses are competing against each other. They're firing up their powerful computers to solve this really difficult digital puzzle. And the first one to crack it, they win. And what's the prize? They get the job. They're the one who gets to verify that whole batch of transactions and officially add it to the public record. All right, so if you want to get into this pretty competitive business, what do you actually need? Well, just like any other company, there are some pretty big startup and operating costs. Yeah, starting one of these businesses is definitely not cheap. First, you've got your big capital investment, really powerful specialized computers. That's your factory equipment, right? Then you've got your biggest ongoing cost, and it is a huge one, the electricity to run those machines 24/7. And finally, you need the brains of the operation, the technical know-how to build and maintain the whole setup. Okay, so you've bought the gear, you're paying those massive power bills, and you've just won the race to solve the puzzle. So how do you get paid for all that work? It's really simple, but it's such an important point. You aren't paid in dollars or euros. Instead, this business gets compensated with the exact cryptocurrency it's helping to secure. It's kind of like being an accountant for a hot new tech startup and getting paid in company stock instead of a regular salary. This right here is the fundamental reason anyone does this. The entire system is built on this one simple idea. By putting their computer power and electricity to work to secure the network, these businesses are rewarded with brand new, digitally created coins. All right, let's bring this all together and take a look at the final business model. What's the real bottom line here? This little table really brings it all home, doesn't it? The service you're providing, verifying transactions. The cost? Well, that's all about high-powered computers and a massive electricity bill. And the revenue? That's your crypto rewards. So the whole thing, the entire business model, really boils down to one simple question. Is the crypto you're earning worth more than what you're spending on power and gear? Look, if you remember just one thing from all this, let it be this formula. This is the engine that makes the whole thing run. A miner puts in the computational work to win the race, they do the service of verifying transactions, and for all that, they get a reward. Simple as that. And it's really important to keep this in perspective. While mining is totally fundamental to how a lot of cryptocurrencies work, it's a very specific, very resource-intensive way to get them. For most of us, just buying crypto on an exchange is the much, much more common way to go. And that kind of leaves us with one big lingering question. This whole decentralized business model, it's designed to keep the network secure, right? To keep it running. But that massive amount of energy it uses, that's a very real cost. It really makes you wonder, is this sustainable in the long run? And who, at the end of the day, is ultimately paying that electric bill? Definitely something to chew on.